this is John Kvale, and this is our March Capital Markets Financial Planning audio video podcast review. I love to do these outside. This is actually the day before it will post, which is Monday, and you'll hear some background noise. It's all original, and longtime followers know I've been fighting the video camera, so I'm not going to give a big close-up of myself, but I'm going to keep this short. What happened is we had a lot of new followers because we were able to add emails to our new website, which brought everybody in. And for those newbies that are first time seeing this, welcome aboard. We're happy we're happy that you may see this. And I do this in a video audio podcast. I always say this: keep your hands on the wheel if you're driving down the road, and stay safe. Here we go. So I'm gonna keep it short. I'm already at a minute, but what I do is I like to go over and give you the ideas in a little bit greater detail of what we were talking about during the month. Those of you that are driving down the road, I am going to the first financial planning tip, and it is all about taxes, corrected 1099s. What happens is we get a corrected 1099 when one of the assets inside of the tax form has to make a REIT statement. It's not controlled by our provider Schwab. The difference is that our new provider is dribbling these things out with no planned frequency. We will give an all green most likely next week for everybody that hasn't filed so far. As I mentioned, so far the several corrected ones that we've had have not resulted in a 1040X. So most likely late next week I'll say, okay, let's go with it. So it's taxes, all about taxes. The newbies, and those that may be listening that aren't clients, we take a very active role in taxes with everybody, and as such, try and keep them in the loop on what's going on. Capital markets comments. It's kind of a two-part thing that feathered together. The CPI, Consumer Price Index, and the Fed is also looking at the PCE, personal consumption expenditures. They're not falling. This inflation readings are hanging around. The Fed has put 2% targets on these, and they're not getting there. That doesn't mean that they're not going to lower rates, but it may be a longer period of time. And fast forward, I did this first article, which is mentioned here, before the Federal Reserve meeting. And after the Federal Reserve meeting, did a quick update article that noticed that their terminal rate, that means the rate that they may eventually drop rates back down to, had been around 2.5. It's starting to creep up. Some are posturing that it was 3.5. I went to a industry meeting, and all the speakers said 3.5. So we'll see if that's the case. No matter what, I put this arrow in here. Their expectations, they're nudging the street to say that rates aren't going to go as low. Not a bad thing, by the way. Only bad thing that may mean is that mortgage rates may not come down. And I have an absolutely outstanding article that I think will make its way to these airwaves, floating around in my head right now. These are all newbies. These are all original. We're welcome aboard. I try and keep them short. I'm like right at 3 minutes. This is not Steven Spielberg information. It's not Steven Spielberg-like delivery, but we feel like it gives a nice personal touch. So thanks for your time. Have a good day. We'll talk to you in this format on a monthly basis at the end of April. I also do this for the newsletter. Take care. On 5.